All right, and we are recording. This is a private Q&A session for the week of June 28th. Today is Monday of June 28th, and let's answer a few questions. This will all become public over the weekend. I will probably do several this week. We begin with a question about Bitcoin. Not going to dox any names, but the person asks, I was in a short from 40,800. Let's round to 41,000. We're going to go ahead and use the daily chart, and we're going to grab the possibility of where the short would have been entered. It was entered at 40,800, so it was entered right here at the top. This was the short play, which means that short trade was actually up really, really nicely at some point for a 28% gain. Now, the person kept lowering the stop loss, and that stop loss got hit last night. So sometime here, the stop loss got hit. That's a 16% move on a trade. I believe that is a very good trade. And right now, the plan, the person says, the plan is now to sit on the sidelines for either the final dump or confirmation that we broke out of this stage. In your opinion, what level would you be looking at after a dump or pump out of the range? You see, it has to do with price and time. Price and time. The sooner you go, the sooner you go up, the higher the breakout level might be. For example, during the video today, I lowered my line down to $37,500 for me to be bullish. But I lowered it with the anticipation that this line will not be broken today or tomorrow, that it would be broken closer to mid-July than it would be broken to closer to, say, tomorrow. So the longer it takes, the lower that line could be. It's also the opposite on the way down. The lower we go, the sooner I become bullish. So if we crash below 25,000 tomorrow, that's it, it's over. But if 3 weeks from now, we only crash down to $28,500, which is a slightly lower low than the prior low, that's not going to be enough for me to say that it's over. On the other hand, if we are going down to 31,000 or 30,000 going into August, I'm going to say that is a good enough low. So it depends on price and time. And right now, I would say 37,500 is good as long as it happens next month. And any crash below 25 is good. I'm still in 100% cash. Is it sensible to start buying around now or wait until we test $30,000 region again or lower? Yeah, so if we go back down to 30, I'm not going to be bullish at all at that price. I'm going to expect a big dip. So that's why I wouldn't be rushing in with cash right now. On a trade, if it's a long-term position, then it doesn't matter when you buy. Difference between trading and long-term hodling. I mean, the ban just, takes more smart people out of the UK and tells them to move elsewhere. That's what it does. Apple daily chart looks bullish. Let's see what the MRI says. The MRI is still bullish for a couple of more days, and then you will hit the MRI top. What about the weekly chart? The weekly chart looks very bullish. The MRI is just getting started. We're breaking the prior swing high, and we're close to breaking the all-time high. What is this? I don't know what that line is. And we're close to breaking the all-time high. So yeah, so Apple looks very bullish to me, daily and weekly. Amazon looks bullish weekly. Oh. and probably daily. Daily not as much, but certainly weekly. Google consolidating at the top, still looks bullish. Weekly's bullish. Netflix is very bullish. Not very bullish, but bullish. What is your outlook for the Bitcoin price this week? Someone that missed my live stream from 30 minutes ago. I really don't have one. We're sitting in the middle, like even the MRI right now on a daily chart says cash. We're sitting near the tops of from a few days ago. Moving average is coming down. We just rallied quite a bit. I just don't see much bullishness right now on the chart. I don't. I don't really have an expectation. Just wait and see. Daily and weekly are both neutral. Even the 4-hour chart, like it's not very useful. The 4-hour chart tells you to be in cash as well with the red one here. So there's really not much going on. Do I think we can retest the 33,000 support level? Of course, 100%. Yeah, we can easily retest it. I mean, we were just there yesterday. So yeah, of course. Is it a concern that Grayscale have been selling some of their Bitcoin over the past few weeks? No, it's the opposite. I'm happy to see that. It needs more Bitcoin in circulation. SCR. That's a 4-hour chart, not very useful. If the chart looks bullish, daily chart, you're in an uptrend. I don't really see any big concerns. You've been in this uptrend for quite a while. Bounced off the moving average, bounced off the trend line. You'll get your MRI buy in a couple of days. Weekly chart. Still pretty bullish on a weekly chart as well. As with most IPOs, it fell 50% after IPO. And that was the time to potentially get in if the company had good fundamentals. And since that time, you are up 50%. It's a good trade in just a few months. SCR and TSX. You gotta be more specific. Oh, it's the same thing. Doesn't matter if it's on NASDAQ, the chart's gonna look the same. Oh, though on TSX, it clearly wasn't an IPO. On TSX, it's been around a while. Yeah, bounces off the moving average, still looking good, still looking bullish to me. Weekly chart had an MRI buy. I wish it came a candle earlier, but that's okay. Yeah, daily, it doesn't look bad. Can I archive the Q&A on the website? Well, it's archived in a playlist on my public YouTube. It just shows up there a week late. Archiving it on the website is just, it's a lot more work. Right, but either way, you're gonna have to wait, right? Because I'm not gonna drop everything after this Q&A, get the video, edit the video, publish the video. Either way, it's gonna come in a day or two late. So it's only a problem if the Q&A is on a Monday or a Tuesday. Because if it's on a Wednesday or a Thursday, then the weekend is almost there anyway. It's just a lot more work. I may start doing it, I may not, I don't know. There's just a lot more work for like 3 people that may go and watch it. Like the a lot of work for very little gain doesn't make sense. When am I gonna start trading SPX? I don't know, probably not anytime soon. I really don't want to trade stocks again. I don't know, I'd have to retire and stop traveling. When I stop traveling, maybe when I have a kid, I don't know. And I'll take a break from traveling. I don't know. So if Bitcoin crashes down to 25,000, yeah, I still believe we can get to 100,000 by end of year. I'm not walking away from that target yet. But it depends when it crashes there, right? Like if it crashes to 25,000 in late August, you know, going from sub 25,000 to 100,000 between late August and January is going to be challenging. It's a lot easier to go from sub 25,000 to 100,000 if it crashed in early June, but it didn't crash in early June. In early June, it continued to maintain the support area. So it's hard to say until it does. Like it's very difficult to talk about hypotheticals after X if X has not yet happened. So we have to wait for X. We have to wait for that drop. Yeah, I do think the bottom is in July. It's also possible the bottom is in. This could have been the bottom. I don't know. But I do believe that it's more likely that the bottom comes in July. Right, so the question is, when does my $100,000 target becomes less probable? Well, if we're still hovering around $30,000 going into August without a big capitulation crash, that makes it challenging because capitulation crash could always happen as long as we're consolidating below 40. Hey, I'm back on camera. Okay. All right, guys. Yeah, go ahead, Andon. Ask your question.
Yeah, so all the crypto YouTubers are like very bullish. Do you agree with them? Like they think the bottom is in, they think we're just gonna go up, and yeah, pretty much everything with the on-chain analytics data, everything.
Well, it's not. I don't want to say I disagree with them. I neither agree nor disagree. I'm waiting for my charts to tell me to be bullish, and right now my charts are not telling me to be bullish. On-chain analytics is saying bullish. Great. On-chain analytics has been bullish for a while now, and yet we just made the low the other day. And I'm not bearish either here because I admit that the bottom may have already happened. Like I've been saying all year, I expected 2 peaks this year, and I expected a drop between them and a bull market to begin, and I expected the bottom to be in this summer. Summer started literally on the day of the low. So I neither agree nor disagree. I'm just looking at the charts, and in my view, I don't have enough reason to be bullish yet.
Also, I have one quick question. So fine.
Yeah, go ahead.
Oh yeah. Basically, I sold most of my, everything, all my crypto at 31.5K. So if I get in around now, I would have less Bitcoin. Do you know where to improve my strategy? Because I'm basically a hodler.
Yeah, see, I'm not sure why you sold at 31.5 because that is really like you already dropped 50%. And that's what I was telling people. Like if you did not sell up here near the $50,000 range, you might as well wait because the bottom is coming any day now. So, like, for example, I didn't sell all of mine. My position is, I'm still long in my position because I missed the proper sales back here. And because my view is that we're going to bottom sometime this summer, I didn't want to panic sell. But a sale at 31,000 is pretty much a panic sell. Like the other person in this live stream, he shorted at 41,000, right? He went short at 41 off the swing back. And I mean, it's a tough wait because I don't know if it's going to go lower than 28. And selling at 31 and buying back at 28 is also not like, it's a risky move. The risk isn't worth it. So I would wait a little bit longer. And then if it goes above 37 and a half, you got to bite the bullet and get in. But I still think there's a high probability of a drop.
Thanks a lot.
The thing is, right, like the mistake was panic selling at 31. That was the mistake. And I've mentioned this on several occasions that this is also why I keep saying that, look, guys, I'm still long because we're in a bull market on a long-term basis. So selling at 31 literally means you sold lower than any daily closing low. And honestly, that's that had to have been an emotional sell. That wasn't a TA strategic sell. That had to be an emotional sell because no one is TA could be unlucky, but it's not that unlucky to get you out of a trade lower than any closing sale. And I don't mean like a stop loss kind of like, shit, I entered a trade and I made a mistake. That only happens immediately after, within days after entering that trade. But you just got to stay patient and wait a little bit. And if you have to buy back in at 37 and a half, then chalk it up to don't panic sell after the market has already crashed 50%.
Okay.
Now, if this was a shit coin, different story.
All right. Yep.
Because they're not expected to ever come back to new all-time highs, at least not by me.
Thank you. Thank you.
All right, we are back with this private Q&A for Thursday, July 1st. We got a bunch of people. We got a bunch of questions. You guys will see this over the weekend in a couple of days. So let's get to it. All right. First question, you guys also have talk privileges. There will be a lot more people in this private Q&A as of next week. So keep that in mind. Okay, so let's look at the questions. Do patterns on oscillators have any significance? Looking at the daily stochastic, a head and shoulders pattern could emerge. Oh boy. You know, I do find some usefulness in oscillators. And in my Q&A video, in my TA video, which I totally forgot to promote on my public stream, in my TA video, I talk about like 15 different oscillators or something, or like 12 different oscillators. But I try not to look for patterns inside the oscillators because the oscillators are already telling you they're derivatives. The oscillators are derivatives of the price. And now you're looking at chart patterns of the oscillators. I try not to look at the chart patterns of the oscillators, but I do find oscillators occasionally useful in determining the price. Next question, same person. Related to past... Wait, I need to do this differently. I need to put this here and this here, so I'm not like turning my head to the side. There we go. And this I'm gonna put here. Okay. Related to past question regarding the head and shoulders on the weekly, head and shoulders target is measured from top to neckline, would put us exactly at the RMRI support line at 20,000. Your thoughts? Let's go to the chart. Weekly. you said. Yeah, I don't like this at all. 4-hour chart. Yeah, so the neck, I don't like this head and shoulders. Let me begin with that, okay? Here is the neckline. I can move it up as high as this, okay? That is the neckline. The break of that neckline is problematic because the top is $28,000 or 88%. So if you flip that, I mean, $28,000 takes you like to nothing, then 88% also takes you to nothing. So technically speaking, this head and shoulders would mean Bitcoin has died. Okay, that's one of the reasons why I find this head and shoulders a little bit useless. And the other is I don't see a head and shoulders here. I just see a slight pause for a couple of weeks. So I have all other metrics that are pointing to the bottom in the low 20,000s, but head and shoulders ain't one of them. Hey, Tone, how long after difficulty adjustment do you think the Bitcoin hash rate will return to new all-time highs? It's not about the difficulty adjustment. The difficulty adjustment is not suddenly going to create more mining units being plugged into the wall. The reason why the hash rate is dropping is because too many mining units got unplugged from the wall. And they're not unplugged because of some kind of, Bitcoin is too expensive to mine. Bitcoin is very profitable to mine. They got unplugged because of Chinese regulation. So until those machines get plugged in a different country, Bitcoin hash rate is not going to a new all-time high. Also, the creation of new mining machines to be plugged into a wall, which a lot of it is done in China, is clearly going to get hindered. So we are at the mercy of getting those old miners plugged back into the wall. And I have absolutely no idea when that's going to happen. It can happen next week. It can happen next month. It can happen next year. But it has nothing to do with the difficulty adjustment. The difficulty adjustment is completely unrelated. Like new machines aren't going to magically appear to get plugged into the wall, because if they were available to get plugged in, they would be plugged in last week, because mining is still profitable right now. So there's absolutely no reason not to plug them in. Okay, next question. Yesterday's Bitcoin brief with Jimmy and Mechanic was really good again. Hope you keep Bitcoin Mechanic on some more. Oh, yeah, no, Bitcoin Mechanic is welcome to stay on the stream unless unless the usual happens with a lot of Bitcoin people. They have a sudden love for shitcoins, which I'm not expecting. Like, as long as Mechanic remains true to Bitcoin and doesn't scam anyone, I mean, there's really no reason why I would kick him off the show. He could get busy. Like, Giacomo doesn't come on the show because I kicked him off. He doesn't come on the show because he's busy. And I haven't seen MVK on my show in a long time. He's in the chat group. He knows what the shows are if he pays attention to it. Yeah, so Mechanic is great. Him and I will probably do a show about Monero together. Maybe we'll bring Crypto Scam back. And we might also do like a climate change show or something. I don't know. Yeah, Mechanic's awesome. What amount of hash rate moving into the United States will be a trigger point for environmentalists to push regulation against us? One more mining unit is enough to trigger them, right? I mean, these people have no logical or reason. It's the same like as the vaccine people. It's they listen to whatever mainstream media tells them. They have no ability for rational thinking. They have no ability to look at actual evidence. They have no ability to collect evidence. They will just listen to whatever the narrative from the government is. So the trigger has already occurred. At this point, the US needs so many machines to prove to them that people are not dying from having every single mining machine. Like when Bitcoin mining is using half of all the energy consumed by America, and people still have not died from climate change, which they're not dying from. I mean, yes, there is a bit of a heat wave right now. Happens. Notice how this heat wave is breaking records that weren't set last year, and last year's records weren't set the year before. They didn't break records from the year before. Like, we're breaking records set like 20, 30 years ago, right? So there is a high probability that 50-degree heat in Canada will not be broken in our lifetime. Records get broken eventually. If the DXY falls, do you think Bitcoin will rise? Maybe. Let me see. Let me look at the DXY chart. I haven't looked at it in a while. Screen share. By the way, guys, if I ever like talk about a chart and you don't see a chart, like someone unmute and like immediately tell me. Like, oh wow, DXY is rising. I did not expect that. I didn't expect that. Really thought it would drop. That's a cup and handle-ish pattern going on there. I don't know. I'm still iffy on DXY breaking 93.5. Yeah, I mean, the dollar dropping certainly helps Bitcoin, but not directly. It helps it indirectly. You know, when the dollar drops, that means there's less interest in the dollar. That means there's people moving their money to other places, and one of those places is Bitcoin. It's not, Bitcoin doesn't go up because the dollar is dropping, right? Because look, the dollar has what? The dollar has gone up in value 7%. Bitcoin dropped in value way more than 7%, right? Bitcoin dropped in value 50%. It doesn't scale like that. Like, the dollar going up 3% should affect Bitcoin for, 3%, should only affect Bitcoin for about 3%. So you can contribute 3% of the crash in Bitcoin to the dollar. But Bitcoin crashed 50%. So what's the other 47%? That's speculation, Holmes. And that's where it kind of ends. So it's all about speculation. So sure, if the dollar reverses and the dollar drops in value 3%, you can attribute 3% of Bitcoin's rise to the drop in the dollar, and the rest is speculation. And, you know, use cases. For someone planning to go all in on Bitcoin, would you recommend doing so with leverage to profit from the swing, or rather to buy HODL without leverage? Of course, I have to recommend without leverage. I would also recommend dollar cost averaging starting now. Like, start getting in now. Dollar cost average, no leverage, maybe 2x leverage, but I wouldn't even do 2x leverage now. I would start getting in now, and if Bitcoin drops to the 25,000 or below, then do 2x leverage. What you have to realize on 2x leverage is, what is the probability of a 50% correction? Right now, Bitcoin is sitting at $33,000. A 50% correction, this is a daily chart. Let's go to the weekly chart, right? A 50% correction from current level is $16,500. Is this probable? No. But is it possible? And the answer is yes. Okay. When the answer to is this possible, when that answer is probably not, then you can go 2x leverage. For example, when Bitcoin is, or if Bitcoin is $25,000, a 50% drop from that area is now at about $12,000. Is this possible? I'm going to say this is highly unlikely. So if Bitcoin falls to the $25,000 vicinity, I'm okay with going 2x because I know I'm not going to lose my life savings. Well, I can, but it's highly unlikely. But prior to this, just dollar cost average and HODL, especially if you plan to go all in. But I don't know what all in means to you, right? For some people, all in means I sold the house. For other people, all in means I took the cash from my closet and put it in. So all in means different things. Isn't the way to measure the target of the head and shoulders to measure from the top to the neckline would be around a 45% plunge? Everyone measures it differently. Like I said, I don't really care for head and shoulders. It's not a pattern I care about all that much. What do you think about Bitcoin XMR atomic swap? I don't. I think it's just a waste of. I think it's a waste of time and energy, and not energy as in like burning of energy. I think it's a waste of computer resources, brain energy, spending time coding it. I think it's just a general waste of time that prevents actual useful Bitcoin adoption. So the atomic swap between Bitcoin and Monero basically lets you convert your Bitcoin to Monero without a third party. So one of the problems with Monero is that you are just as doxxed by entering and exiting Monero as you are by entering and exiting Bitcoin. So for all the privacy features of Monero, they become useless if everyone is watching you enter and exit Monero. Now, if Bitcoin is as not private as they say, using Bitcoin to enter and exit Monero, I can't see it giving you that much more privacy. Yes, there's no middleman exchange that knows your KYC information, but you could also enter your Bitcoin to Monero trade on a non-KYC exchange, but then still there is an email involved, there is IP addresses involved. So it gives you a little more anonymity, taking your Bitcoin, converting them into Monero without a middleman third party. Great, good for you. Now you're going to go and use that Monero in a transaction that is probably that has a high probability of being illicit, higher than a Bitcoin transaction, right? Look, I will be the first to admit that the percentage of illicit transactions in Bitcoin compared to all transactions in Bitcoin is greater than the illicit transactions in the traditional fiat system compared to all transactions. Though that statement may also be incorrect because there are so many illicit transactions in the traditional system. Here's an example. Cannabis and marijuana is legal in the majority of the United States, but it is still illegal in a lot of parts of the world. So fiat transactions for cannabis are on the legal side of fiat transactions, while fiat transactions for cannabis in the other half of the world are illegal transactions in fiat. Okay, so anyway, I think you guys get the point. So out of all the Monero transactions, the percentage of those Monero transactions being for illicit purposes is greater within the Monero network than the amount of Bitcoin transactions being illicit for things. So you're already dealing, and the amount of all transactions on Monero are significantly smaller than the transactions of Bitcoin, right? Your perfect privacy messaging app is not very useful if 10 people in the world use it, right? If 10 people are communicating on their own private network, it's not hard for the government to figure out who those 10 people are. And while they may not be able to see the messages, they know who you are and they know you are using Monero, right? And it's only a matter of time before they put a magnifying glass on what the hell you are doing, because a lot of those transactions require things being shipped somewhere. So there is still records involved, right? So if you need your Bitcoin transactions to be mixed, you can send those Bitcoin transactions into the liquid sidechain, convert them into liquid Bitcoin, which doesn't have the price fluctuations, and it doesn't have the same risk of going to zero, and it doesn't have the depreciation risk over time versus Monero. Like, if you really need private transactions, learn how to use privacy in Bitcoin. Yes, it's a little bit harder to learn how to use privacy in Bitcoin. You may have to send your Bitcoin into liquid, get them out. Nothing illicit about that. You may have to learn how to use CoinJoin or join markets or whatever, okay? If you need more fungibility and privacy in Bitcoin, you have the tools. They're not as, in the layer as Monero, but it's possible. And but you are removing all other risks. The risk of the Monero blockchain being exploited is infinitely higher than Bitcoin blockchain being exploited. The risk of holding on to the Monero too long has a huge financial risk involved, because its value versus Bitcoin can only go in one direction on the long-term scale, and that is down, okay? So it's a trade-off in risks. So wasting time on atomic swaps instead of focusing on making Bitcoin more private and fungible, to me, seems like a money grab and not actual, benefit to society. How do you think with El Salvadorians cope with volatility in Bitcoin? Will they all become traders, switching constantly between US dollar and Bitcoin? Will prices of vegetables change 10 times a day when calculated in Bitcoin? Or will it only matter since everybody will be Bitcoin anyway? One second. So, look, for the moment it matters, but soon it won't matter, right? Because it really depends on how much imports Salvador depends on. I don't know the economy of Salvador, right? But if Salvador is the kind of country that grows most of its own food, people can just start charging for food in sats, right? And then those sats would buy other things, and Bitcoin would just become very, very valuable there. So they can have their own circular economy and not care, okay? Like, after Dubai, we're organizing the financial summit in Bali. And the prices, and we have to cancel the last financial summit in Bali because of COVID. And the hotel rooms are priced in Indonesian money. And Indonesian money has depreciated against the dollar. So it's great for us, but the prices in the Indonesian currency stayed the same. They haven't really adjusted because a country could be self-sustained on their own currency as long as it doesn't go to haywire. So as long as people are making sats, I mean, the prices will slowly drop on things in sats. So hopefully in 2 to 3 years from now, everything in Salvador is priced in sats. That'd be great. We'll see how it happens. I don't really know how it's going to happen. 93 to 95 is the key area for a break for the dollar. Hey, Mark. Dollar trending to the range could be a decent place to buy some Bitcoin. Yeah, but as I explained, like Bitcoin doesn't go up or down because the dollar is rising or falling by 3%. It's going up or down for significantly bigger factors. Do you think a correction is coming soon for all markets? Usually when the 10-year yield goes down and spikes up, there is a correction coming. Keep in mind, everything is breaking records. Look, the S&P is bullish other than right now. As I showed earlier today, the S&P is on an MRI warning. So the S&P could be topping, but do I envision a big crash? I don't. I don't. The government is still printing money and people are still buying from Amazon. So I don't see it. I don't see a correction yet. What's your outlook for the next couple of months? What does the price need to do for you to be super bullish? So let's go back to the charts. Guys, my outlook hasn't changed since the last few months. I am looking for a low this summer, and the summer started on this day. Summer started on June 21st. So sometime this summer, I am anticipating a low in the price of Bitcoin. And I still think we can get a lower low. How confident am I on that? Maybe 55%? That we're going to get a lower low? And then we're going to consolidate. We're going to bounce up quickly. We'll consolidate in the 30s, and then we'll consolidate in the 40s. And then the next thing you know, we go from mid to high 40s straight to 100. We can double in a matter of months. Thoughts on the short term? I'm bearish right now on the short term. There's really not much to be bullish on in the short term. I just don't see it. Look at the 4-hour chart. We just got a brand new potential closing low with an hour to go. At the 1 hour, right at the lows, like what happens when we break prior swing lows? What happens when we broke the last prior swing low on the hourly chart? We dropped 3% for $1,000 right into an MRI buy. So what do you think is going to happen this time we break the prior swing low? However, this swing low is happening way closer to each other, so there hasn't been as much consolidation. So I'm not as bearish on this. Also, the break of the prior swing low was technically the break of a consolidation since 3 days ago, right? So it was support on the 28th of June twice, and then it was support again on the 30th of June, and then it finally broke. So I mean, if we break down, we'll probably consolidate at these lows of 32,500. That's probably the next target. Then you consolidate here for a bit, and then you drop one more time. This looks exactly like that chart that I had. So this picture, right? So you go up and you have support, and then you break support, and then you find support at a prior level, and then you break that support, you find support at a prior level, then you break that support. So this right here, this is what is happening right now on the 1-hour chart, okay? This should really be in the Learn Trading free section. It should really be in here somewhere. It's one of my charts that I just never posted here. So this is what you're looking at. And if you go to the 1-hour chart, that's what we have. It's making this like mountain, and now we're going down the mountain. And eventually the cycle breaks. But right now we've broken the last, this is more of a head and shoulders, So right now this break right here is the equivalent of this break right here. So you establish support, this one, then you established it again after the peak, and now you broke it. So we establish support here, then we go to peak, then we hit the support again, lower high, boom, support breaks. What are you buying to hedge your Bitcoin position? I'm not. I'm not. I'm just gonna buy more Bitcoin. If it falls further, I'll just buy more Bitcoin. I'm not too worried, right? I mean, while I do think the price can come down from a time perspective, it's going to be short. So just don't spend my, I'm just not going to spend any money over the next few months. So I don't go broke. Can we go to 32? Yeah, we can go to 32 today. Is the crossing of the purple and yellow moving average, 50 and 200, on the 1 hour chart of any significance to you? Would you consider the candle rallying into it a perfect shorting opportunity? Not perfect because it's only happening on a 1 hour chart. What moving average? I just gotta make sure. I think that's 50 and 200. No, that is okay. So these are my daily time frames. These are my weekly time frames. I'm assuming it's these. I believe that's the 20 and the 200, not the 50. That's the 20 and the 200. That's the 50. I think. I don't know. Like this thing is daily and weekly, and I'm not sure what it treats for less than daily. But I'm assuming. I mean, you can check it, right? You can just create a. I can just add a moving average. And I can make this moving average a 21 period and see how close it is to the, yeah, so that was the 20. And I can also make it a 51 period to see if the other one is a 50. Yeah, and that's the 50. Right, so it's 20 and 50. So that's the 20 versus 200. I don't really care. I don't generally care much for moving averages on small time frames. When is the low coming, since many people still quite bullish? I think the low is coming this summer, like I've been saying. Sometime this summer. Joe is streaming now. Cool. He's saying 31's possible. Yeah, I believe him. Where does the green 1 above a green 2 approach come from? Well, it's the opposite. Green 2 above a green 1. That's what creates the green stars. The green stars. It doesn't have to be a 2 above a 1. It could be a 3 above a 2 if a 2 doesn't go above a 1. But it's the green star that tells me that we have a bullish trend, and the red star tells me we have a bearish trend. Yes, sometimes you get, what is this? Interesting. I have no idea what these things are. Oh, that's where the I know what it is now. Okay, no one. I mean, you do get these stars sometimes that don't work out as good trades. But let's say you went long on this green star. This red star told you to go short. So sure, you lost money on the long trade, but you made a lot of money on the short trade, and the green arrow told you to take profit. So it's just it's just a trading strategy that could be utilized with the MRI. All right, guys, that is it for me. Thank you all so much for joining this private Q&A. I might do one of these on Saturday. I'm not sure yet. So if I do, just keep an eye on your email, and I will see. Oh, wait, there was another question I forgot to answer. Shit. Okay. One more question. It's a really long question. It's for someone that hasn't been able to make these, though I don't normally make a habit of doing that. And I don't know if I'm going to do one of these on Saturday. You know what? I am going to do one of these on Saturday, so I'll answer it then. All right. I'll probably do it. Yeah, I'll probably do it on Saturday. All right, guys. All right. Thank you all for watching, and see you all on the next one because I'm getting kind of tired this morning. Bye, guys. All right. Welcome back to another private Q&A session for this Sunday, July 4th. And you guys should see this publicly very, very soon. Okay, first question. I want to manage Bitcoin as Tyler Jenks would have done. I hope a lot of people here remember Tyler Jenks' YouTube channel, Hyperwave.
It was very, very good. And he was more of a money manager than a short-term trader. He would have had me out now. That is true. Tyler James would not be long Bitcoin now. I want to be a macro swing trader, not every move, but only the major ones in and out. So I have bought in from 1,000 to 52,000, and trouble is that a big chunk of the money went in at 50,000 for GBTC. I bought early and made a lot, then rightly worried and a fall was coming, sold at 44.5, then saw the market rising again and bought back at 45. Now this is showing a loss. So two questions. Question one, what do I do now that I have set on BTC and GBTC while it tanked? And two, if what is right for me is macro swing trades, how do I distinguish between traders and even swing traders objectives and what Tyler Jenks was doing, i.e. maybe a couple of trades this year, maybe not at all, responding immediately, crazy times, yeah. Okay, so let's go and take a look. So the problem is that the asset was GBTC, and GBTC has had very weird swings in premium. See, at the moment, premium is still negative. And I personally believe that we're close to a bottom sometime this summer. So I would not panic sell at this point. I would just accumulate more cash and be ready to buy in more. That's what I would do now, mostly because I would, mostly because the sale was not done in time. Now, right now on GBTC, we continue to have lower lows and lower highs. So the next time GBTC breaks a high would be at 31.25 or so. So around 31.25, I would consider going long on GBTC. That would be my move. But Tyler Jenks was a big moving average guy on a weekly scale. So now we go to the weekly chart and we're going to adjust the moving averages to Tyler Jenks's weekly scale. Now, Tyler didn't really use these longer term moving averages on a weekly scale. I believe he really liked the 7-period moving average. So we can have the short term moving average as, I'm trying to think the best way to do it. I can always make this a 7. And this was a 20. And this is a 50. Like, this is what I would use. I know Tyler had slightly different moving averages. And like for me, the first, if you use this, if you use the 7, the 20, and the 50, the first sign of trouble was right here. This was the first sign of trouble. Now, Tyler also would have loved to pay attention to the lucid SARs, and the lucid SARs called trouble the week of the actual top. You can see how the lucid SAR flips, okay? Now, the following candle is below the moving average, and it's a red star on the MRI. So this candle creates trouble in both the MRI and the lucid SAR and the moving average. So this is when you want to start lowering your exposure to Bitcoin. Now you can see the following candle got back into the moving average, and the candle after that had an entire body of that candle above the moving average. Now, let's analyze this candle from the three perspectives: moving averages, MRI, and lucid SARs, plus chart patterns, right? So to me right now, what does this mean? Well, the lucid SARs are telling you it's still a bearish environment. The MRI is telling you it is still a bearish environment. The moving average, however, is telling you that it's a bullish environment, and the chart pattern, the consolidation at the top, is telling me that it's a bullish environment. So we are 2 to 2, okay? Completely neutral. So the smart thing potentially is to do nothing. But if your primary element for longer term investing using technical analysis, and this is a critical moving average for you, then you can put whatever you sold back into the market right here in the high $50,000 range. Let's see what happens next candle. Actually, I'm just gonna use bar replay, and I'm just gonna grab that chart, grab that. Okay, and now I'm gonna get next candle. And now, so what happens next candle? Oh wait, it's the same candle. Let's finish this candle. Thought it looked weird. Okay, this candle's over. Nope, no, it's not. Now it's over. Okay, so what happens next candle? So as you can see, next candle continues consolidating. And so the chart pattern is still leaning bullish, but now you close below the moving average, and that's bearish. The MRI remains bearish, and the lucid SAR remains bearish. You can see how this candle, oh, I'm sorry, this candle's not over yet. That was just the first day of that candle. Let's go to the end of the candle. Okay, there you go. That's the end of the candle. Now, by the time this candle ends, this candle is incredibly bearish. Okay, everything is now bearish. We've just established a new low. You've now broken below 2 moving averages. The first moving average is now declining, and you're still below the lucid SAR. So if you lowered your exposure here, let's say on this day, you are 100% invested to Bitcoin. Now, by 100%, this could mean several things, of course. This could mean that your Bitcoin part of your portfolio is 100% in Bitcoin, or your entire portfolio is 100% in Bitcoin. It's really up to you and risk management, right? But whatever your Bitcoin allocation is on this day, you don't necessarily have to reduce it on this day, but you should reduce it on this day. If your reduction, let's say on this day, you reduced that Bitcoin portfolio by 20%. On this day, you decided, you realized this was a mistake, and you went back in that 20%. On this day, you have to get out, and you have to get out more than 20%. Would you get out the entire 100% or only 50% or 60%? I would probably be out at least 50%. And again, if this is the Tyler Jenks style of trading using moving averages and maybe lucid SARs and maybe MRI. Okay. Now, once these moving averages cross, and once this other moving average starts to decline, you have to be out more than you already are, unless this took you out 100%. So let's say this takes you out 50% out of Bitcoin. So you still have a 50% Bitcoin allocation. Let's see when, according to Tyler Jenks, you would consider getting out more. Like sometime during this candle, you have to get out more, because now there is a moving average crossover as this candle begins. That's another element of problems. The MRI continues to deteriorate. Lucid SARs continue to deteriorate. Everything is going bearish, right? So now you probably should be out at least 75%. Okay. Now this moving average is still rising, but this moving average is not going to be rising for long. So you can continue to hold, 25 or 33% exposure in Bitcoin. And this is a weekly MRI buy, but again, the MRI is not that important here. It's the moving averages. Tyler Jenks' number one thing was moving averages and Consensio. You can now see that depth cross, this moving average has now leveled over. And if this moving average starts to trend down, that's another big nail telling you to lower your exposure. So let's play out some of these candles a few more times. Right. So you can now see how now we have two moving averages trending down, and the price is establishing new lows. This is the only thing keeping a bit of a Bitcoin bullish position. But this alone is honestly not enough to hold on to more than 25 to 33% in your Bitcoin portfolio. Again, if you are using these longer term metrics, my Bitcoin portfolio is bigger than, it's not 100% in Bitcoin. I have some cash ready to redeploy, but I'm not as low. But again, different. Tyler, I'm just talking about what Tyler would have. Tyler would probably be no more than 20 to 30% invested in Bitcoin right now, in my opinion. I wish he was still alive to actually answer the question. So let's play this out till the end. And this is where we are today. So now we have two declining moving averages, the 7, the 20, and that's the 50 is still holding it up, okay? But once there is another def cross, or once this 50 starts to leveling off, Tyler wouldn't have any exposure to Bitcoin, if assuming he still has a 20% exposure now. To me, from a long-term Tyler Jenks style of trading, he would not have more than 20 to 30% of his Bitcoin allocation bullish. He would have gotten out, and he would have been 100% allocated to Bitcoin right here, because on this candle right here, you have all your three moving averages are rising, and the price is above them. You're also breaking out above the prior swing highs. There is no better time to be 100% allocated to Bitcoin. And again, by 100%, I don't mean 100% of your money. I mean 100% of the Bitcoin allocation, which for some people could only be 10% of a portfolio. All right, long answer, but I owed a friend one of these longer explanations. Okay, and now I have some questions. Well, let's move on. Somebody wanted me to take a look at sand. So this is the daily chart of sand, and it's leaning bullish. However, it's in a bearish environment. So it bounced very, very nicely. And tomorrow or Tuesday, when markets are open, you could have a green star candle with a bullish MRI trend. However, you have a def cross coming. What are my moving averages here? I'm using a different. Right, so this is the short term, this is the daily time frame, 20, 50, 200. Okay, so based on this 20, 50, 200, there is a def cross coming between the 20 and the 50. So if the price goes into this def cross, I would be very, very skeptical that it will continue going higher. So to me right now, there is a bullish opportunity from $8 up to $8.30, which is probably not enough for me to take the bullish trade here. So I would just stay away. Weekly chart, promising bullish looking candle in, once again, a bearish environment. So I would actually do nothing, and I would look for better trading opportunities. Hey, my 4th of July is going great. Let's take a look at Apple. Ooh, this looks good. Weekly chart of Apple, you can see clearly that this is a bullish chart. Apple has been consolidating in this slightly bullish looking ascending triangle. I know there's it's not perfect. Like there's this one break in the action, but to me, this is a pretty nice, solid, bullish ascending triangle ready for a clean breakout. Apple is looking great. Plenty of room on the MRI. I know we have rallied quite a bit here. All the moving averages are rising. They are all above each other, or at least they will be when the market opens. And Apple has been consolidating for a year. I mean, look, Apple hit $137 a share in August of last year. We're 1 month away from August of this year, and the price is 139. So Apple hasn't increased in price in a year. So I think Apple is looking bullish to me here. This clearly got way overextended versus the 200-day moving average. You can see how far the price of Apple was above the 200-day moving average. It was 74%. Whenever stock gets to over 200%, over 100% of its 200-day moving average, that's a bit of a caution flag. You can see how a little bit later the price got to 44% above its 200-day moving average. But right now, we are only 14%, 13% above the 200-day moving average. So it's not really a topping situation. So I think this weekly chart looks pretty bullish. What about the daily chart? 200-week moving average, sorry, not day. Daily chart could be toppy, and it is. See, the daily chart hit an MRI top on Thursday, so I would not have entered into any bullish trades on Friday, even though it was a nice bullish day. I would, maybe wait a day or two, and it's possible that if you wait a day or two, the trade can get away from you, but that's one of the risks you take. This is an unfortunate situation where we went up for so long that we broke the resistance line of the MRI right at the MRI top. And in a perfect world, we would have pulled back on Friday. But remember, the market is also on an MRI top. So I still think all of this is going to pull back a little bit. From a daily perspective, you did get a little bit out of control versus the moving average. That was, well, it's only 34%. Not that bad on a daily scale. And right here, you bounced off of it. Look how the 200-day moving average supports it real nice. Yeah, okay, so my long term would have been the 50, not the 200. Okay, sorry guys. So when I was looking at the weekly chart, this is not the 200 week, that's the 50 week on the longer term scale. But you can still see the exponential rises versus these moving averages. So I would be a little bit cautious from a daily perspective, but from a longer term weekly perspective, this is Apple's very bullish. All right, that was a little bit longer answer than I should have done. Sorry, Tony, I missed the stream. What are your thoughts? I'm still in cash. What's the best possible way to get in? I would just stay patient. I would just stay patient. I mean, I just explained like the whole weekly process, the whole weekly look. From a daily perspective, you're running into a resistance once again. Now, I can make the argument both sides. I can make the argument that this is a bit of a dead cat bounce and it's about to reverse. I could also say, hey, we're about to break the prior swing high. I would just stay patient. Like until Bitcoin establishes itself above $37,500, I'm not exactly in a rush to buy back in. So I'm still giving it a slightly greater than a 50% chance that we're going to have one more capitulation below 30,000 and probably below 28,000. The longer term moving average is starting to level off. The 128 is potentially going to cross the 200. These are all bearish signs, and I still think Bitcoin is going to bottom this summer. But the TA picture is not very clear. Take a look at plug. Sure, let's take a look at plug. Ooh, interesting. Okay, daily chart of plug. Well, this should be fairly clear. You have an MRI top right here, which bounced back to market. Hold on 1 second, guys. Okay, so sorry, back. So this is very, very obvious. You had an MRI top there in order to exit your bullish trades. Now you can also say, hey, Tone, there was an MRI top right here. So if you would have exited your bullish trade or shorted, you would have lost money. And the answer is yes. Not every trade is going to be profitable. This green star candle tells you to potentially get back into your bullish trade, which would have worked out to a point. Wouldn't have lost you that much money. But yes, this shorting or exiting your trade wouldn't have cost you money, would have cost you a little bit of an opportunity. Shorting would have cost you money, but you would have made up for it here because shorting, exiting your trade, you can now buy back in cheaper, or shorting it, you're now in the green. So at this point, you have to assume that it's a 1 to 4 candle correction. The first candle of the correction clearly started with the MRI candle. This was the second candle of the correction. And now there's potentially 2 more candles of corrections, or there aren't, right? If you are in a short trade and you didn't enter that short trade on Friday evening, you should already be considering a break-even stop loss. And if the price of plug goes above this $34 vicinity, I would say that if the price of plug goes above $34.35, I would consider going long. $34.39. Okay, I hate going long pre-break of round numbers. I would rather like go long at say 34.52 or say 34.28. But I think 34.28 is a little bit on the low side because it has not yet broken the top of that candle. I mean, every penny counts if you are trading the stock in a $30 range. If you're an options trader, you can be a little less picky because you have a slightly, more leeway. You have the option spread, you have all this other stuff, But this chart looks certainly bullish. You had a beautiful MRI buy right here, right at the low. And on a weekly scale, the moving averages have, looking okay. And from a weekly scale, this is also looking pretty bullish to me. I know it's a very bearish weekly candle, but look, you're above all the moving averages. Almost all of them are rising, and 2 out of 3 are rising. And your MRI still has room. And other than this being a bit of a reversal candle, and considering how much this thing has fallen, this thing had like hyperwave written all over it. Oh no, not really. Look at this. Yeah, I'd lean bullish here. Time to short Ethereum on a daily? Question mark. It's always risky to short shit coins, but let's take a look at Ethereum on a daily versus Bitcoin or versus dollars. See, versus Bitcoin on the weekly, this looks very strong. That was a strong showing from Ethereum. Wow, interesting. When did I draw this red arrow? Huh. Wish I remembered. What about the daily? Yeah, see, look at the daily. It is stuck right at the moving average, but it's still bullish-ish with the MRI top coming soon. Look at that beautiful MRI top on a daily versus Bitcoin back in June. And you're going to have one more MRI top on a daily coming in on Tuesday, because today's Sunday. So it's possible that Ethereum would be topping very, very soon. Versus the dollar. Ethereum is at an MRI warning candle. So tomorrow, Ethereum could top versus the dollar and start to reverse course. So yeah, versus the dollar, it is setting up for a nice short trade. Versus Bitcoin on a daily chart, it's also potentially setting up for that. But from a weekly scale, that's a pretty strong showing. Though versus the dollar, it's not that strong. I would not be going long on this chart until it breaks this high of 28.75. EDU. Oh man, I used to trade EDU back in the day. I remember this stock. Stock is old. I remember trading this God knows how long ago. EDU has been around forever. Maybe not forever, but in my trading history, it has. Because back then, this was the height of my trading career. It was like 2005 till, like maybe a little earlier than that, till around 2016, 17. I remember EDU. Monthly chart. Wow, look at that. I just looked up monthly to look at its history. I didn't realize the monthly chart would call the ultimate high. And this stock must have split because I don't remember it being this cheap. It must have had a stock split somewhere. TradingView usually shows us stock splits, maybe not on a monthly scale. Beautiful MRI monthly top. Oh yeah, there it is. There's a stock split. Yeah, 10-to-1 stock split. Yeah, that makes sense. I knew it was a way more expensive stock. Oh, it's other stock splits here. Yeah, 4-to-1. Yep. Yeah, it used to be a way more, because I remember this being a $20 stock back in the day when this chart showing it to be like $1. And then I just answered that question. Like, what would my entry be in GBTC? I answered it like 5 minutes ago, man. And I don't really want to give specific entries because this is not it's not really a show on when to enter and when to exit. So I like the bottoming here. I like the weekly chart, and that next week is going to be an MRI buy. The stock has fallen quite a bit. Has fallen 62%. So yeah, I would be very interested in a potential buying opportunity here next week if we start trading above the moving average. Daily scale. Wait. Oh, the 12-hour and the daily would be the same for a stock. That's right. The daily chart does not look very bullish, right? Look, you're consolidating at the low, and the MRI is still giving you a bearish count, and we had a red star candle just the other day. So from a daily perspective, I would stay patient. So on a daily scale, I would wait until we break out above that moving average, because right now there's a higher probability of a breakdown below the prior swing low. And this is an example of why I respect moving averages. You can see how perfectly the 50 has rejected the price of EDU right here. Thoughts on Amazon? It's probably going to be similar to Apple. Amazon Daily. Oh yeah, look at that. I really like it here. I really like the bullish case for Amazon. It's consolidating near the top. You can make a case. This is a cup and handle pattern. Amazon has not made a new high since September of last year. I mean, it's a giant consolidation. You can also go to the weekly scale. Is this on a monthly scale? Right, so look at the monthly top on Amazon here. You had a monthly MRI top with extension B followed by extension C. And this happened in August of last year. So it's been a year. And look, this is a green star candle on a monthly scale. I think Amazon is ready to break out. 1 second, guys. Okay, I'm back. So Amazon looks really bullish to me here. We can look at how often these green star candles show up. Now, keep in mind, this green star candle is very different than this green star candle. Very, very different. This green star candle takes place after the MRI, immediately following the MRI pop. It's, I mean, it's also an indication that prices are set to go higher, but in a very different, it's very different, okay, than this one. This one is, to me, a safer trade than this one, though they're both bullish trades. Now, remember, this green star candle shows up in the first half of that. Well, this one would have shown up in the middle of that candle. And this is a monthly scale. So this green star is more similar to this green star than that one. Also, this one is also more similar to the current one. Then, like the current green star candle is somewhere in between this one and this one. It kind of takes place like right here where this red star would have been had this candle went up instead of down, okay? And prior green stars on a monthly scale have done well. Maybe not this one here, but again, this is a green star that takes place immediately following the MRI top. You have to be a little bit more cautious with these. You have to be a little bit more cautious with these versus the ones that take place within consolidation, okay, on a breakout of new all-time high. So, of course, I am very bullish on a monthly scale for Amazon. And on a weekly scale, same thing. We just had a green star candle 2 weeks ago, and Amazon looks very bullish on a weekly scale. All right, guys, I need to get going. This was great. I mean, all the questions were giving me a chance to look at stocks and analyze them, which is the main reason for why this private Q&A exists. So this was absolutely awesome. Thank you so much. I'm gonna probably end it here. This was a great session. Thank you all for joining. As a quick peek at Bitcoin, I am completely neutral on the weekly scale. On a daily scale, I am completely neutral as well. And I would not be considering going long Bitcoin unless it is establishing itself above $37,500. And I continue to anticipate a potential drop for some final capitulation in this mini bear market. Mini bear. All right. Thank you all for watching. Have a good 4th of July. Thank you, Brandon, for your 4th of July wishes. And I will see you guys on the next private QA. Bye, guys.